Hey there everyone, let's take a look at the S&P 500 and the Nasdaq and see what's going on with the stock market. Here you're looking at a chart of the S&P 500. Friday's price closed at 510.85, closing down $7.15 or 1.38% for the day. The volume ticked slightly higher with shares changing hands on volume 16% higher than usual. So not enough volume to signal the selling is over. I for one would be shocked to not see a gap down on Monday at the open. I would expect SPY to open around the 506 to 505 level, and on the triple Qs, QQQ, I would expect it to open near the 433 to 434 level, should we see the major indices gap down on Monday's open. I'll be watching to see if prices can stabilize at these critical key levels. If not, and if we see the price slip below the key levels I just shared with you, then I expect these lower targets to come into play in the week ahead. Before I give you those lower targets, I want to share with you that as I write this technical analysis on the S&P 500 and Nasdaq price forecasts, I'm watching events unfold on TV regarding Iran sending missiles and attack drones into Israel from Iran. This type of escalation will likely cause an initial sell-off, but I do expect prices to potentially stabilize in a few days after the key levels below get tested. Price did find support and managed to close above the rising 50-day moving average, currently at 509.74, which marks the first test we've seen of the 50-day moving average since November of last year. What jumps off the chart is that the 50-day moving average is still about 9% above the 200-day moving average, the highest we've seen in years, suggesting the selling may not yet be over. The market has been in a strong, resilient bull trend, but over the last 6 weeks, it has been able to break above 524 or below 508. So I'm setting alerts at 524 for a breakout and at 508 for a breakdown. Should SPY close below 508, that would give the bears the confirmation they've been looking for. A break back above 524 and it's blue skies ahead, but for now, I'll be watching for a downside breakdown. After Friday's larger elephant bar and Thursday's big red elephant bar, one can't help but notice that the bear candles are much stronger than the bulls candles all of April. April's price action is signaling a shift in momentum, with down days having much heavier volume than green days. Friday was also the first time that price pierced the lower Bollinger Band since last October. A break below 508 and that would increase the odds of an unfilled gap test near 501.46 to 492.03 within 3 to 5 weeks or less. Considering the size of that gap, I would expect a bounce the first time near the 500 level before filling that gap all the way down to 492, with the 100-day moving average providing nearby support at 490. Moving on to the Nasdaq 100's triple Qs, QQQ, the tech-heavy index has been in a range for the last 6 weeks, with price unable to break above 449 and unable to break below 433. So I've set my alerts for a break above 449 and a break below 433. The Nasdaq is holding up better than the S&P 500, but if we see a break below the 433 level, that would increase the likelihood of a 100-day moving average test near the 421 level. Regarding the Nasdaq 100, if price should rebound back to the 441 level, I'll be looking to sell that level or load puts. Regarding the S&P 500, SPY, should price rebound near the 514 level, I'll be looking to sell that level or load puts. If this video resonates with you, take a moment to leave a comment below and share this video with your friends and colleagues. And don't forget to like the video. Until we meet again.